Get ready for the news that is shaking the entertainment world. Kylie Minogue is opening up in a brand new 3-part Netflix documentary where she dives deep into 4 decades of fame, past loves, and the intense misogyny she faced throughout her career. We explore how Kylie Minogue navigated the overwhelming attention of stardom and the cruel scrutiny of the industry in this intimate look at her journey to becoming Australia's best-selling female artist. Companies are showing strength in the face of market shifts and what the latest earnings reports are telling us about the subscription economy. And finally, we take a look at the cultural impact of television. We analyze why Wanda Sykes' Netflix special Legacy didn't quite land for some viewers, examining the shift toward heavy political focus and what modern comedy needs to do to connect with audiences. Don't miss out on all the stories shaping your world. Stay with us. Noi Dung Kai Tight. Kylie Minogue reflects on 4 decades of her career, past relationships, and the misogyny she faced in a new 3-part Netflix documentary titled Los Angeles Times. In the intimate production, Minogue anchors her perspective with the line, "Life makes sense to me on stage," reflecting on her monumental success, including 17 albums, 80 million worldwide records sold, over 5 billion streams, and her status as Australia's best-selling female artist, recognized by 18 ARIA Awards and 2 Grammys. And the documentary, directed by Emmy-winning editor Michael Hart, utilizes home movie footage, personal photos, and interviews with family, former colleagues, lovers, and friends like musician Nick Cave, who describes her as this force in the pop music joy machine. The film charts her evolution from a teen soap actor to a globally recognized superstar, revealing her journey as a publicly confident performer, alongside a resilient survivor of breast cancer, and the challenges of navigating the fickle nature of the entertainment industry. And Minogue stated that the decision to share her story came not from a seismic shift, but from gentle, prolonged encouragement by producer John Batsek. She noted it took several years for her to agree to participate in the project. And addressing the intense early fandom, Minogue acknowledged that while navigating the attention was a process, the press was the primary issue, as public perception often differed from her personal reality. She observed that millennials and younger audiences who discovered her in the 2000s were unaware of her earlier moments. And the documentary delves into her past relationships, including co-star Jason Donovan and Michael Hutchence, and the bond with Nick Cave. Minogue explained that sharing personal life details was a gradual decision, particularly regarding Hutchence, noting that Michael Hart's poetic direction shaped how those memories were presented. And she also touched upon her experiences with the LGBTQIA+ community, recalling early exposure to Kylie Knight and experiences at venues like Three Faces in Melbourne and Mardi Gras in Sydney. Minogue shared a profound reflection on her cancer diagnosis, describing it as a life-altering event that instilled a determined, positive outlook, emphasizing that love, from family and friends to the audience, provides the strength to overcome adversity. And looking ahead, Minogue hopes viewers take away the message that life is a lifelong journey, emphasizing self-acceptance, valuing relationships, and embracing the philosophy, "Let the love in and let the light out." She concludes that by reflecting love back to others, positive energy is multiplied, leaving the audience with a message of human connection. Netflix is recalibrating its growth narrative, shifting investor focus from traditional subscriber counts to its strategic integration of artificial intelligence, live events, and gaming. With the stock currently trading at $89.65, Netflix has demonstrated significant historical returns, underscoring a pivot toward leveraging technology and capital deployment rather than solely focusing on streaming numbers. The company's current strategy highlights a preference for selective investment. By stepping away from large bidding contests, such as the Warner Bros. Discovery deal, Netflix is channeling resources into AI tools and targeted acquisitions, exemplified by the purchase of Interpositive. This move aims to secure in-house AI-powered filmmaking tools that can streamline production, visual effects, and localization. Simultaneously, Netflix is enhancing its ad technology and creator tools for improved targeting and measurement. This technological focus is being complemented by an expansion into content technology platforms, incorporating live events, gaming, and video podcasts. The overarching goal appears to be establishing Netflix as a versatile content tech platform capable of reusing intellectual property across diverse formats, moving beyond reliance on singular, high-profile series. For long-term investors, the critical assessment rests on whether this combination of technology-driven initiatives and disciplined spending can build a more durable business model beyond conventional streaming. Key metrics for monitoring include how frequently management links AI tools, gaming, and live events to concrete results like free cash flow, content spend efficiency, and ad revenue. Investors are also watching the balance between smaller, technology-focused M&A, like Interpositive, versus pursuing massive studio acquisitions. Competitor reactions, particularly from Disney, Warner Bros. Discovery, and Amazon Prime Video, to similar bets on AI-driven production and live formats will be crucial indicators. Furthermore, regulatory developments concerning AI, data privacy actions, and content costs will shape the risk profile of this strategic shift. Ultimately, Netflix's future valuation hinges on its ability to execute this transition into a broader content technology leader. Consumer subscription stocks delivered a mixed performance in the first quarter, reflecting shifting consumer expectations and broader market anxieties. Analysts note that consumers increasingly demand hyper-personalized, on-demand goods and services, driving the stickiness of subscription models across online consumer businesses. The group of 7 tracked consumer subscription stocks reported revenues that collectively beat analysts' consensus estimates by 1.6%, although next quarter's revenue guidance remained in line. This mixed performance has led to a rough stretch for the stocks, with average share prices down 7.7% since the earnings releases. Netflix, NASDAQ, NFLX, the pioneering streaming platform, reported revenues of $12.25 billion, marking a 16.2% year-on-year increase, exceeding analysts' expectations by 0.5%. However, the quarter was slower for the company, with earnings per share guidance for the next quarter missing expectations. Consequently, Netflix's stock dropped 16.8% post-report, trading at $89.70. In contrast, Roku, NASDAQ, ROKU, which provides hardware access to streaming services, showed strong results. Roku reported revenues of $1.25 billion, up 22.4% year-on-year, surpassing analyst expectations by 3.6%. The company's strong performance was further highlighted by an impressive beat on EBITDA estimates, leading to a 6.7% rise in its stock, currently trading at $124.34. Coursera NYSE, COUR, an online learning platform, reported revenues of $195.7 million, up 9.1% year-on-year, meeting analyst expectations, though revenue guidance for the following quarter slightly missed forecasts. Coursera's stock declined 4.6% post-results, trading at $5.70. Duolingo, NASDAQ, DOL, the mobile language learning app, demonstrated robust growth, reporting revenues of $292 million, a 26.5% year-on-year increase. Duolingo topped analyst expectations by 1.2% and posted a solid beat on EBITDA estimates, with full-year guidance exceeding expectations. Duolingo achieved the fastest revenue growth among its peers and secured the highest full-year guidance raise. Bumble, NASDAQ, BMBL, a leading women-focused dating app, experienced the weakest performance among the group. Revenues were down 14.1% year-on-year and met analyst expectations. The quarter was notably slower, marked by a decline in active buyers and missed revenue guidance for the next quarter significantly. Bumble's stock fell 25.9% since reporting, currently trading at $3.18. The market narrative has shifted significantly. Concerns over artificial intelligence eroding pricing power and crypto infrastructure value led to a rotation away from those sectors. However, this focus on technological disruption has been abruptly superseded by geopolitical risk, with the U.S. conflict with Iran becoming the dominant driver of market psychology. Investors are now prioritizing factors like oil supply, inflation, and global stability over pure growth rates. Wanda Sykes' Netflix special, Legacy, has drawn mixed reactions, with critics noting that while the special excels in relatable, observational humor, it becomes bogged down by an overly heavy, one-sided political focus. The special centers around Sykes returning to her alma mater, Hampton University, with a broad scope promised by the logline to cover everything from global affairs to cultural clashes. The initial reception was positive, with viewers finding enjoyment in lighter moments, including Sykes' impressions of Donald Trump. However, the commentary suggests that making politics the central theme limits the special's appeal to a broader audience, as the reviewer emphasized the importance of balanced political commentary in comedy. Despite these reservations, praise was reserved for Sykes' moments of silliness. Specific examples cited included a humorous observation about the frustration of waiting in line at a self-checkout, which resonated with the reviewer's preference for absurd, observational humor about daily life. Overall, the special was not disliked, but it did not secure a spot on the reviewer's list of favorites. The review concludes that the crowded stand-up market makes it challenging for specials to stand out, though Legacy was deemed more lighthearted than other politically charged comedy offerings. For viewers seeking guaranteed, intense laughter, the report recommends Jimmy Carr's Last One Laughing on Amazon Prime.